Good morning, Shindo here. Back to economic news from CNN Money. Many big European banks have lost half their value. Half. Many European top banks have lost half their value in a year, and the stock market rout continues. The institutions nursing some of the biggest losses are the large banks like Deutsche Bank, Barclays, Credit Suisse, and allied Irish banks, all of which play a vital role in the economy. In fact, only one European bank stock is up this year, and you've probably never heard of it, Hungary's OTP Bank. So what's going wrong? Here's the gist of it. Stressed about stress test. The sell-off accelerated this week after, quote, stress test. In 51 of Europeans' biggest banks, regulators wanted to know whether the banks could cope in the event of another deep economic shock. The results were generally better than expected, but not good enough to raise fears that some would fall in a crisis. Quote, the banks are poorly capitalized, unquote, says Diane Perret, a finance professor at the University of Louvain's Business School. Quote, they still have bad assets on their balance sheets like bad loans, and the risk of contagion from the banks of one country to another country is also high, unquote. Perret and fellow academics say 29 of the 51 banks would fail an American-style stress test, and they need to raise 123 billion euros, $138 billion, in capital to shore up their finances. Italian banks fared particularly badly. Analysts at Barclays said stability in the Italian sector would remain, quote, brittle, despite news Friday of a private sector rescue package for Banca Monte dei Paschi di Siena. Details of the bailout have led to heightened concerns about rival UniCredit's financial health. Negative rates and economic woes. Germany's Commerzbank warned Tuesday that negative interest rates and, quote, adverse markets, unquote, will hurt earnings. You think maybe that negative interest rates might hurt earnings? Well, let me ask you, would you put money in a bank if you realize that you have to pay to do it? That you have to pay them? Its share hit a record low, but it's not alone in feeling the pain of extreme measures by central banks. Negative interest rates, which are set by central banks like the European Central Bank, charge banks for holding onto cash. The aim is to get them to lend money to businesses and individuals to get the economy moving, but they're not getting great returns when they loan out the money. Quote, you have a low interest rate in a slow economy, which means they're not lending enough, and they can't make money on their loans, unquote, noted Perret, which will lead to them giving people who wouldn't normally get loans, which will lead to default on those loans. Brexit in the background. On top of all this, the UK vote to leave European Union in the next few years has created additional risk. Shares in UK and European banks came crashing down in the aftermath of the Brexit vote on June 23rd. Many have yet to recover their losses. London is the financial center of Europe. Any change to trading and financial relationships between the UK and Europe would have big repercussions for banks operating in the region. Businesses have been urging Britain to move fast with its Brexit plan to keep uncertainty to a minimum, but the process is expected to take years. Biggest losses. Here are a list of some of the worst performing banks over the past year. Barclays down 49%, Commerzbank down 55%, Credit Suisse down 60%, Deutsche Bank down 65%, Union di Banca Italiana down 67%, UniCredit down 69%, Allied Irish Banks down 70%, Banco Popular Español down 71%, Banca Monte de Pace de Siena down 85%. This cannot go on without a major repercussion hitting all of the economies of the world. We, for good or bad, have a world economy now. And I firmly believe that this is what's going to catapult Trump into the presidency. Because the reason he's not, this is my opinion, I have one, the reason he's not stressing so much about the economy now is because I believe he knows that the economy is going to go through a major financial crisis. Let's put it that way. Collapse would probably be a better word. I believe it's going to happen before the election. That is, if I am right, and I believe to be right, otherwise I wouldn't believe it. That is that someone somewhere wants to see Donald Trump in as president, and this is what's going to catapult him in, this and the other thing that he's stressing, the whole law and order. So keeping an eye on the banks in Europe is a wise move as to what to do with your personal financial security. This is Shindo. Have a good day.